right, let's take a look at what's happening market-wise this morning. As always, joining us on a Monday, always good to have Joseph Busha from JM Busha Investment Group taking a look at what was last week and what the forecast for the week is ahead. Hello, Joseph. Good to have you. Hope you had a good weekend as well. I mean, let's not talk Proteas. I think we'll just carry on living vicariously through the Springboks right now. But solid earnings last week. I see a lot of central banks having a bit of a perceived tilt. What does that mean exactly as we look at the indicators this morning?
Well, it's basically just positive. I think if you look in terms of the rand, we're pretty strong. I think compared to where we were 2 weeks, 3 weeks ago, the rand basically trading at about 18 rands, 24 cents to the dollar. That is a massive improvement from where we were. Gold price also is slightly up. I mean, although still down, the psychological 2000 mark, platinum also down. But I think the most important thing is crude oil. We see it down from also 90. Where we were Gaza thing spilled out in the Middle East. So I think those are all positive for SA economy, given the fact that we rely heavily also on diesel to power basically our plants and so on. So that is good news. So the equity market also recovered significantly. We were below 70,000 index levels. Now we're up to about 72. And that is borne by the fact that, we've seen some positive earnings, across the globe. We see today the Dow is up 0.2%. The futures also indicating up. And that is really could mean that we might have a very positive week this week.
I just want to get your thoughts very quickly before we move on to the mining sector. Just take us back to midterm budget policy statement, MTBPS, if you prefer the acronym, last week. What was the focus for you in that budget? Fiscal damage management is what I was hearing.
That's what it is. I think if you look at it in terms of where we are on a debt perspective, debt to GDP levels up 50% from 2008 or since the financial crisis, and it is expected to go to up to 75% by 2024, which is next year. Some of the things that have been really is that, we have obviously state capture, the financial crisis, power outage, lower taxes that collected. And also we have basically seen that, economists and a lot of business people are saying, the salary wage bill, government wage bill is too big, so that needs to be contained as well. So revenue is expected to fall collection by about 56 billion, from February forecast. And they're basically looking at tax collection, especially within the mining sector, because we've seen less profits there. That basically is contributing to that revenue collection being less than what was expected. But on the positive side, after that, certainly, it was better than what was expected. And hence we saw our yields, bond yields, and the rand strengthening.
Just speaking of all things falling, let's talk about the mining and manufacturing data numbers coming out later this week. And some of the miners, the results, the expectation, Joseph, they're not going to have great results. They haven't exactly hit pay dirt.
No. So you saw that Sibanye Stillwater basically shedding jobs, and that is on the talk. And we have had bumper kind of profits in the last few years. Given the fact that, we're coming obviously from a low base, I think in 2015, and all these mines were really making good profits, but also buoyed by the metal prices that were up, but they've stabilized. I think if you look in terms of platinum below 1,000 and currently at $937. So I think that is going to really affect their profitability, and hence you see some mining is trying to cut jobs. If you look at all this, whether it's Impala and so on, Northam, all of them, the share price is possibly down about 20-30% from the highs we saw 2 years ago.
Joe, it's a massive drop, 30% to the bad at the moment as well. Just before I say goodbye as well, when we talk about the manufacturing side, I think a lot of people forget that you have a knock-on effect in the value chain. So let's just talk about a big logistics group which is feeling the effect of that drop in manufacturing numbers, Joseph, as well. I'm not too sure how you'd say the name KAP. I'm afraid I'm not in that world, so I don't quite know the name and how to say it.
So it's basically just kind of pronounced CAP. So CAP is one of our biggest, diversified manufacturing chemical logistics groups. It earns about 80% of its revenue in SA. So it's quite a good indicator of how the local economy is. So basically they're saying, for the next 3 years or so, they see a very weak trading environment in the country. And hence, obviously, in terms of their performance is also quite low. So that's an indicator. But I think if you just move also global, one of the biggest shipping companies in the world sees its revenue falling 92%. It is an indicator or proxy for global economic growth in terms of moving of goods and commodities through the seas. Certainly, I think that is really just showing constrained global economic growth, and South Africa is basically not saved from that.